The U.S. has a population of approximately 307 million people. We're split roughly 50-50 male-female. And our ages? 24% are kids under 18, 13% are over age 65, and the rest of us fall somewhere in the middle. Franklin Templeton Investments recently commissioned a survey of 1,000 people across the U.S. to ask for their thoughts on investing today as well as over the decade ahead. The results were pretty surprising. No doubt, we've been through a rough period. In 2008, the Dow was down almost 34%, and it was one of the worst years on record. However, in 2009, the market rebounded and ended with an annual return of almost 23%. Surprisingly, the majority of survey respondents thought the market performed poorly in 2009. In fact, 66% thought the market was flat or went down. It didn't seem to register that 2009 was actually a pretty good year. Their perception did not equal reality. Conventional wisdom says that gold is a good place to be during times of financial turmoil. Right now, you can see advertisements for buying and selling gold on TV, billboards, radio, online, and even mall kiosks. When asked what people thought would have been a better investment over the past 30 years, almost 60% thought gold outperformed stocks. While gold, precious metals, and other commodities play an important role in a diversified portfolio, the reality is that stocks performed over 12 times better than gold over the past 30 years. What's the result of all this pessimism? During 2009, net flows for equity funds were a negative $8.8 billion. That's a lot of investors who didn't participate in the market's rebound. There's still $3 trillion in cash on the sidelines, and that's over 80% higher than the 20-year average of $1.6 trillion. Not only do where dollars are going show people's attitude toward stocks, when survey respondents were asked how they felt about investing in stocks today, 57% said they thought stocks are too risky. Women tended to feel slightly more negative, and somewhat surprisingly, 18 to 34-year-olds were the most negative, despite the fact that they had the longest time frame to recoup losses. That said, half of respondents thought the best investment opportunities over the next decade would be outside the U.S. The survey also asked people about their outlook for the future, and nearly 60% didn't think the Dow would pass 15,000 over the next decade. What's more, 71% of people thought stocks wouldn't rise more than 7% annually over the next 10 years. Even though the average annual return of the Dow since 1969 was 10.5%. Of course, past performance does not guarantee future results. It seems people's pessimism about investing in stocks is coloring their perception. If you want to avoid getting tossed around by short-term volatility, you need to establish an investment strategy that helps you focus on long-term results. Take action by contacting your financial advisor so you can discuss how an appropriate allocation to equities may help you meet your investment goals. Or use the button below to learn more about Franklin Templeton's 2020 Vision, the case for equities in the decade ahead. It introduces 5 reasons equities may play an important role in your portfolio over the next 10 years.